Ladies and gents, if you're looking to make money in this day and age, look no further. I'm going to explain to you where the money is and what you should focus on. Look, making money is all mindset, but I'm not here to tell you you should think about making money. Wake up, drink orange juice, wake up at 4 a.m., have a cold shower. No, I'm going to direct you guys. I'm going to tell you exactly where to go, because a lot of you are waiting for a real estate crash so you can buy for $1. Now, do you think you're going to buy something for $1 in this day and age when the market is 70% cash buyers? Now, it is no surprise that the Federal Reserve, the central banks in Europe, have discouraged you from making money. And they do that. They're not even hiding it. They're telling you today, listen, Paul, we do not want you to make money because you're going to contribute to inflation. And they've done this because they've hiked interest to all-time high now. Okay, and when they do that, they're trying to encourage you to save your money rather than spend it. So they don't want you to invest it either, because you're going to contribute to this inflation in the equity sector and in assets. So when you hike interest, you're trying to get the demand to meet the supply. Okay, so of course, in order to do that, you have to tell consumers, stop spending. And in order to stop them from spending, you have to cut the flow of money. And that's exactly what has happened, guys, with the central banks and the US Federal Reserve. But this will not last for long, okay? So, how do we prepare ourselves? Well, a lot of you who are waiting for a real estate crash, take it from me, this will never happen. Maybe you get a pullback, but not a real estate crash. Because as I said, 70% of the buyers in the market are cash buyers, institutions from offshore, from onshore, and they're keeping the demand up. So where can we focus on our money to make money? Well, guess what, guys? Back to the stock market. But we're not looking at day trading. We're not looking at scalping. We're looking at position trading. Just like if you would buy real estate, you're betting that the real estate market will get hot again. Well, if we buy beat down stocks and position ourselves in beat down stocks, we're betting these stocks will get hot again. So I'm going to jump into the computer. I'm going to show you some figures. I'm going to explain to you the strategy, guys. And hopefully this video gives you that guidance. And I'll see you guys before this video ends.
So let me explain to you why the stock market is currently undervalued. And then we'll go over to how much you actually need to make enough money, or how much you need to make enough to satisfy your bank account. Now, one thing for sure, guys, is the market currently is struggling as a result of this treasury yield, 10-year treasury yield. Every time it goes up, the market tends to come down. Today it went up because inflation, or CPI, missed by a percentage point. And you got to understand, even if you're picking great stocks, these stocks are not going to rise if this thing is rising. Stocks work against the treasury yield because it indicates that interest rates will not be for long if this keeps dropping, and if it keeps increasing, then it indicates to the market that interest rates are going to linger for longer. So that actually scares tech stocks in any emerging market, or any stock that is heavily in debt or it's small in size. Okay, so that's just one thing you got to keep in mind. So that's the opportunity. The opportunity is to go for these stocks that are currently undervalued because of external factors like geopolitics and macroeconomics. Okay, and let's talk about really what are we focusing on here. So let's say we have 10,000 to 100K in savings, and let's say you want to put it to work. Now, if I'm looking for 10% increase on, let's say, 100K, now that's going to be 10,000 return, okay, on investment. But it all depends on what stock you actually pick. Imagine I have 10,000 and I split it between two stocks. But those two stocks I pick, one of them is a fast mover and has volatility. And what am I talking about here? Well, let me give you an example of a fast mover. For example, here is Riot Platforms. This is a Bitcoin miner. I've got 2,000 shares. This is the portfolio. I shared this on the new community that I have for investors. And you can see I'm up 7% on this. 7% translates to 1,200. In comparison, let's say RockQ. Okay, RockQ, I'm down 6%. I'm down 1,400. So, am I really profitable if I'm down overall? Or what? What's the problem here? Well, the problem is when it comes to investing in position trading, because that's what you'll be doing, is position trading. You're simply laying the seeds and harvesting them when one of them is profitable. But the rest, for example, RockQ is something of, let's call it tech. Okay, it falls under tech. I know it's down, even though potentially it has a lot of value on user growth. It's down because the overall market is pushing it down. So when the overall market pressure is lifted, I'll harvest this stock. So I could take the 7% from Riot Platform that's generating 10% just like this overnight, or I could hold on and go for 30% instead, or 100%. And when we look at these stocks, for example, let's just give me a second. So let's look at Riot here. Okay, let's go to 5 days. You see, 5 days you get a 15%. And then this is the downside of position trading. You get 11% down if you don't take your profit. But these are the fast movers. As a day trader, I'll probably be too late to take that percentage because this happens overnight in pre-market because it reacts to Bitcoin. So this is where position trading becomes a thing. It's to look for stocks that are undervalued, maybe fast movers, and you enter those stocks and you sit and wait. Okay, now I could take this profit if I wanted to, but I won't, right? I'm looking for big returns. There's no point of taking profit. I could be at a loss before taking a profit. And this is the risk of position trading. Because really what you're doing here, you're not day trading, you're not investing, you're acting like an investor, but you're not. You're something called a position trader, which is really, you're looking at a stock, you're buying it somewhere, let's say here, and you're thinking to yourself, this is a good place to buy it. I'm going to wait for market conditions to get better because I know it's going to reverse and it's going to generate me profit. But does it generate you profit? Most likely, not everybody's lucky enough to have profit generated immediately. You might encounter a drop, right, as soon as you buy, and you will be put in a red. But that doesn't matter because your trading style is to sit and wait till the pressure is lifted, or for these events that are causing the stock to be undervalued disappear. And that's what position trading is. In comparison to investing and swing trading, well, investing is the same, but swing trading is when you actually see the trend like this and you say, I'm going to get in. But that works in bull markets. Right now, this is not the market for it. This is the market for position trading. Okay, you might go all in on one stock. You might go 100,000 on 5 stocks if you're looking for big returns. And ideally what we're looking for with position trading, we are looking for something like 10% to 50%. And this is something we will kind of get used to over time. But as we grow the account, we can start to aim for 10% only because we're going all in on 1 to 2 trades only instead of diversifying a big portfolio. Okay, and that's how we do things, because in a bull market, it is safe to go all in on 1 to 2 trades. It's never safe, but it's extra safe to go in on 1 or 2 trades. But in a market like ours, it's best to diversify amongst 10 stocks, but make sure you're a good stock picker.
The only risk we carry on position trading is that we don't get to see the money instantly. But if we're in good stocks, then that's okay. Now you might have an argument. This is not the right time to invest. Well, when is it ever the right time to invest? When the economy is hot? When things are already 50% up? Or should we be the ones who buy at the bottoms and sell when it's 50% up? Okay, so that's me done, guys. Appreciate you watching. If you want access to my portfolio, look in the description. Other than that, I'll see you guys very soon, and I appreciate you for watching. Bye.